After receiving a disappointing annual forecast, Palantir stock continues its downward trend on sales of around $1.9 billion. We anticipate an adjusted income of approximately $342 million. Both of these numbers came in far lower than the average expert had anticipated. Welcome to the Stockroom YouTube channel. In today's video, I will share with you recent Palantir stock news, so make sure you watch the video until the end. Do not forget to like the video, subscribe, and comment on what you think about Palantir stocks. With no more excuses, let's dive into the video. The data software business Palantir Technologies Inc. anticipated yearly sales and profit that fell short of analysts' expectations, which caused the company's shares to drop by as much as 15% when a smaller percentage of clients are willing to spend money. The data software company is going to face a significant difficulty, which is reflected in the prognosis. The reduction in the stock price on Monday represented the greatest drop throughout the trading day since the company last disclosed its financial results in May. Palantir stated in a statement that it expects its adjusted profitability to be approximately $342 million on revenue of approximately $1.9 billion in 2022. This forecast does not include any substantial future contracts with the United States government, according to estimations published by Bloomberg. Industry experts had anticipated an adjusted income of $527.9 million on revenue of $1.98 billion on average, according to Damian Riemertz, a contributing analyst to Bloomberg Intelligence. Increased competition from Snowflake Inc. and other software companies, particularly those with a larger cloud presence, could hinder Palantir's ability to sell to businesses. And additional salespeople could significantly compress the company's operating margin. Both of these factors could have a negative impact on Palantir's ability to sell to businesses. Alex Karp, the business's chief executive officer and one of the co-founders together with the billionaire Peter Thiel, was unconcerned about the concerns regarding the performance of the company during the second quarter. During a conference call with investors on Monday, he made the statement, "We manage this company like owners. We don't run it quarterly to quarter." Palantir got its start in 2004 by selling data analysis tools to the Central Intelligence Agency of the United States. Since then, the company has gone on to secure dozens of contracts with other government agencies in the United States and in nations that are allies of the United States. Its software has been used by government customers to combat the COVID-19 outbreak, uncover tax cheaters, and, more controversially, gather public health records and carry out immigration enforcement. Since Palantir went public in 2020, developing Palantir's commercial business has been the company's top focus and has taken on a greater sense of urgency. Palantir's government business is still significantly larger than its commercial business, according to a statement the company provided to Bloomberg earlier this month. Palantir plans to raise its total employment by approximately 25% this year, with a primary emphasis on growing its commercial sales team. According to Karp, the current revenue of Palantir is being driven by only 42 salespeople in the United States, even while Palantir has more salesmen than that on staff. Only 42 of them have learned the product so far, according to him. And according to Karp, they are convincing, according to what he shared. "We've brought back some consumers who, to be very honest, didn't like us. But the product brought them back during an otherwise dismal quarter." One of the few things that went rather well for the company was its commercial operations, notably in the United States. During the second quarter, global commercial sales reached over $210 million, representing a 46% increase over the previous quarter's total. The period that concluded in June saw a total revenue gain of 26%, reaching $473 million. This result was in accordance with the expectations of industry analysts. The quarterly loss for Palantir was $179 million, which was much higher than what experts had anticipated and than any previous time since the company went public for the first time. The loss after adjustments came in at $21 million, which was far lower than the adjusted profit of $91 million that analysts had predicted. The CEO, Karp, stated that the strength of the dollar had a negative impact on the company's profits because 40% of Palantir's business is conducted outside of the United States. During the conference call, Karp stated that he anticipates Palantir to become profitable in the year 2025. According to him, the choice to move the company's headquarters from Silicon Valley to Denver right before going public in 2020 will help save costs significantly. This decision was made just before the company went public. This is the end of the video. Do not forget to like the video, Subscribe and comment down below what you think about this video.